Good morning. It's Wednesday, the 5th of June, the day after the election results. And as you saw yesterday, the kind of volatility which most people would not have experienced in a long, long time. This is Vijay here to take you through the daily market commentary with a very important message of what the markets did the last 2 days. Therefore, the title of today's topic is Has the Market Topped Out? Generally, I am very wary of people who talk of market topped out, bottomed out, because I too was a victim of such delusion where every fall we say market has topped out, every rise we say market has bottomed out. So now over a period of time I have tried to analyze and see what is the probability of defining a market top or a market bottom. Now today let's talk of the market top. There are three specific conditions which I look at. One is that high euphoria. I've always believed, and it has been proven by facts, that markets never ever top out on bad news. Market tops out on good news or impending good news. So, therefore, there is euphoria created where people feel that there is no chance of a correction. That's exactly what people felt on Monday when the markets went and made an all time high. Even though on Friday they were weak, but the fudged exit polls, for which it's a criminally fudged exit polls by the exit pollsters, I think they should investigate and be and take them to task because 8,800 crores worth of shares were purchased on Monday with high euphoria, and who sold is $1 million question. And if SEBI investigates, if they have the guts to investigate, they'll find out it will be politically connected persons, which will also be linked to the media and the exit pollsters, is my guess. And it's a guess which is most likely to come correct. So, therefore, first thing is there should be euphoria, which we saw there. The second is it should be accompanied by high volumes. Now, it is not necessary that all market tops are on high volumes, but there will be significantly large volumes, which we saw day before yesterday, about 1.71 lakh crores on the NSE. Typical average daily volume is about 1.1 lakh crores. The third is not only, before I go to the third, the second point is not only on the day of the top, the follow up day also should have high volumes. So if there is no volume on the topping day, the follow up day should have high volumes. So lo and behold, yesterday the volumes were about 2.7 lakh crores, which is what nearly more than 150%, 170% of a typical average day volume. So that's the second confirmation. First, euphoria. Second, accompanying volume. Third is your indicators or oscillators, which is I use the moving average. So you have exponential moving average of 9, 20, 50, 100, and 200, which are popularly used in the market. In one fell swoop, all the moving averages were broken yesterday. It almost came and touched the 200 DMA and took a support. Typically, in one fell swoop, you will not have all the averages being crushed. So it is no surprise that the market took support at the 200 DMA. So what we can see is we have a euphoria, we have an extremely high volume accompanied with by even higher volume with the price action. The third is it has breached all the moving averages. So that is given a high probability of the market having topped out. As I said before, nobody can say 100% sure that it's a market top or a market bottom, but we can use some tools to understand. So I'm going with this theory that's a very high probability that the market has topped out on Monday. Tuesday, volume, extraordinary volume, and also break of important support levels. Now, yesterday, if you observe, there are many stocks which fell 25%. The indices at one time, Nifty fell 9%, but and recovered. It fell, I think, around 6%. Same thing with Bank Nifty. Bank Nifty fell a little more, actually. And then Bank Nifty fell 8%. As I've been mentioning, Bank Nifty is a better indicator of the health of the market. So Bank Nifty is clearly giving us that signal that something is wrong. I'd also mentioned that the market knows the election movement before the market men. Market men get it wrong, but the market never gets it wrong. So that's what happened till Friday. The fraud which was created on the weekend through the exit polls to offload shares slightly shook a lot of people's confidence in this dictum that the market knows better than the market men. So that stop losses might have been triggered. But finally, yesterday we are back to the way the market was supposed to go, which is down. So therefore, that dictum also has been taken care of. So sectoral indices, many of them went 10% lower. I don't need not talk of which sectoral indices. Across the board, it is the case. So FIS sold 12,400 crores and DIS bought about 3,300 crores, which works to 16,000 crores. Now the same question will come: who bought this? Somebody who took advantage on Monday sold and short sold, and they have covered their shorts. So therefore, there is a good chance of this bottom being there for some days, but it will be vulnerable for the next wave of selling, which will come in the next few days when political scenario will get heated up. So that is as far as the scene on the market is concerned. Let's look at the global markets. Dow Jones, Nasdaq, and S&P were down mid-session, but they have recovered. Dow Jones is closed 140 points up. S&P is flat, and Nasdaq is about 30 points. Nikkei opened lower. Down was 300 plus points today, and Hang Seng was up 200 points, and DXI is flat. DXY is flat at 104 and odd. Oil is giving up. Now, oil giving up and the yields are giving up means a recession is in store for us. Clear indicators, early indicators of a recession. So that is one thing we need to, take into account. And what will happen in terms of the stocks today? There could be bounces, but there could also be selling by the brokerages based on the margins which must have been triggered yesterday. So you will see a very volatile market. Also, please remember today is the weekly expiry for Bank Nifty, and certainly you can expect injections from these hedge funds. So all in all, a heady cocktail, but I would now begin to really look for bargains in non-popular stocks. See, the Modi stocks I will avoid, which is the PSUs and PSEs. I will look for FMCG. I look for standalone stocks like a Bata India or a Campus or a Sun TV, McDowell, these kind of stocks. They are there. Apart from pharma and gold and silver, though, I am there every day wherever I get the money. So we have a choice. It is not that the market is in a bear market. Even if it's a bear market, you will not have any choice. We are always fully invested. The challenge is to find stocks where you can invest and make money even in the worst of the bear markets, which we have seen in the past. And there have been stocks which have withstood the worst of the bear market, like 2008. So if in 2008 one could buy stocks and make money, I'm sure you can make money even in this kind of situation. So whatever you do, be very, very careful. Don't be led by or misled by these rumors, especially these blue channels, as I call them. And just take care. Strap up for a rollicking ride. But there are opportunities at the end of the spectrum. Thank you for joining me.